Hello and welcome to Market Domination Overtime. A record day on Wall Street. New records for the Dow and the S&P 500. Jared Blickery has a closer look at the action. Jared.
Oh, Josh, you're just getting started here. We got a lot of records today, so let's dial up the Wi-Fi Interactive behind me and start with the Dow. That's where we're seeing some of the biggest gains today. That's up 1.3%, or good for about 650 points. NASDAQ, meanwhile, in the red today. Wasn't the strongest day. Tech was had a pretty bad showing. We're going to get to the sector action in a minute, but you'll note that it paired a lot of those losses. Then, meanwhile, S&P 500, another record high here, and the S&P 500 equal weight, that is a record too. Guess what? Small cap land, Russell 2000 up 1.33%. That is a record high. And not shown, we also have the S&P 400. That is the mid cap sector. That was the first record high in about a year. And I'd be remiss if I didn't show you microcaps too, because we got a record high there as well. So a lot of stuff showing a lot of strength today. And let's just take a look at that sector action I was alluding to. In the bottom, at the very end here, we got energy and tech kind of switching places, each down about 0.5%. Communication services down about half of that. But the real strength today was in some of the cyclical sectors. Materials up 2%, financials up a little bit less than that, industrials up 1%. Then the list goes on for healthcare, staples, and utilities. So you've got some value plays, you've got some cyclicals, you've got some defense, all of those on the top row there. Also real estate and discretionary down here. Those outperform the S&P 500, which I'm circling right now. Taking a look at the NASDAQ 100, doesn't look like this was the best day, but that is in large part because the mega caps were just not cooperating today outside of Microsoft and Meta. But we're looking at Alphabet down over 2%, Broadcom and Nvidia and Tesla off more than 1%. But the Dow seeing pretty strong action today outside of those mega caps. We got Visa up 6%, Disney up 2%, American Express, that's probably another record high. They're up 2%, Walmart and JP Morgan up more than 2%. So really strong showing there. And let me just show you the transports as well, because those have been flying recently. Just a few days ago came off of a 10-day winning streak, and here we're seeing a lot of green there. So the bottom line is the industrials, which are making this stuff, and the transports, which are shipping this stuff. I just did a post on Dow Theory earlier today. It's perfect for this. So things are confirming, and that just shows you the bullish nature that we are having into year end. Just a little bit of sector rotation is all. So tech not so great today.
All right, Jared, thank you. Appreciate it. Well, the action on Thursday highlighting a broadening of the rally, which is a strategy my next guest says investors should be eyeing into the new year. Join me now, we got Victoria Fernandez, Crossmark Global Investments Chief Market Strategist. Victoria, it is great to see you as always. Let's start with the macro. Yeah. This U.S. economy of ours, Victoria, is it softening? Is it stabilizing? When you look at just the balance of data, what do you see ahead for 2026?
So if we look back over the last month, I think you can definitely say we were in a softening period. So we look at a labor market that was weakening. We look at a very skittish consumer, valuations higher than what maybe most people are comfortable with and wondering when that's going to pull back. Inflation being sticky. I think these are elements we can say, yes, we definitely had a softening of the economy. What I think is interesting now, and not just because of the Fed meeting yesterday, we were seeing it a little bit before that as well, is there's starting to be this element of maybe some of those things are bottoming, and therefore that slowdown is ebbing and you can start to have some growth going into the new year. So you look at the breadth that you were just talking about. The breadth in the market is great. S&P equal weight is actually performing really well and made new highs. Russell 2000 made new highs. So that breadth is really strong. You have a lot of fiscal stimulus coming in the beginning of next year, and a lot of people say yes, we have the OB3, or I always feel like I'm on Star Wars when I say that, but
I get it.
You know what I'm talking about. So we have that, and then there's the potential for financial deregulation, right? So easing monetary standards coming out of that. All of that, I think, tells you there's this tailwind in the market going into next year. That tells me we need to be in the market, but those warning signs underneath tell us we need to be cautious of where we're investing.
What do you see ahead for the American consumer? We hear a lot of talk, of course, about the K-shaped economy.
Right.
Although I had an economist on the show today who said, he was saying monetary stimulus, fiscal stimulus. He was saying, listen, prices at the pump, sub 3.
Right.
What does that mean for the consumer?
I do think there are some tailwinds for the consumer, and that fiscal stimulus is going to be one of them. It's not just for corporations with CapEx and research and development. There's a lot of tax breaks coming for the consumer in the first part of next year. But let's look where the consumer is right now. And I do think that K-shaped economy comes into play. You look at Lending Tree, they put a study out. It's that lower income consumer, 50,000 and less. They're actually spending less than they spent last year here at the holiday season. It's that higher income consumer that's really and truly doing all of the spending and the heavy lifting. Higher income consumers, they're supported by the stock market. So as the stock market does better, they feel better and they spend more. Same with housing. That lower income consumer is driven by what they're making at their job, their compensation, and that is slowing. And so I think that's why we are seeing a K-shaped economy, although there will be a little bit of a tailwind into the beginning of next year.
So your views of the macro, Victoria, that means what for earnings growth in 2026?
Surprisingly, we're seeing earnings expectations move higher. You know, typically you go through the first two months of a quarter and people are lowering those earnings expectations, right? You always want to lower the bar so that you perform better. We're actually seeing earnings expectations move higher in October and November and the first part of December, which is kind of unusual. So it looks like they're going to be higher. For 2026, you're looking at earnings of almost 15%. I would have thought the concerns around tariffs, concerns around wages, profit margins would be deteriorating. All of that would play in to earnings coming down. We're just not seeing it. That's positive momentum for companies to keep their employees. So maybe we won't see layoffs rise as much as many people anticipate.
I got to ask you about the great AI theme and trend story. You mentioned, here's how you put it, Victoria. You say a rethinking of the AI story. What does that mean, a rethinking?
So you remember when all of the news came out first about this CapEx around AI, people were elated. They're spending millions of dollars, billions of dollars, right, on AI, and that was a big positive for those companies. Then you started to get concerned, whether it was circular financing, whether it's companies having to go to the public debt market. What does this mean for their balance sheets? One of the reasons these hyperscalers have had such good valuations is because their cash flow has been so strong. So what does all this mean? And are they going to get a return on that money? We haven't seen that yet. And I think that's where people started to get concerned. So there was a rethinking around, is this CapEx really such a good thing? All of this spending, are we going to see a return on it? Is it going to be good or is it going to hurt the balance sheets? And I think that's part of what this rethinking is. It's why you saw a lot of the tech names pull back over the last few weeks. Not that they're down and out, not that they still don't have strong valuations and strong balance sheets, but I do think it's not just anything related to AI you can invest in and you're going to make money. That has definitely changed over the past month.
So Victoria, what are sort of the investment implications of that though? Because to your point, if you look at Mag 7, you have seen this real dispersion in stock performance. It's more like the Mag 3 or 4, right? What do you do with that as an investor in 2026? Pick your spots more carefully? It sounds tougher.
It's definitely tougher. You can't just go all in on any sector and say this is going to be a winner. You know, we put it in, we're done, and we just sit and recoup, our benefits from there. You're really going to have to be picky. And I think when you look at some of the Mag 7 names, you do have to look at what do those free cash flows look like going into next year's. Some of them are negative. That's going to be a red flag for you, right? And I think that's why you're seeing, like you said, just a Mag 3 or Mag 4, no longer the Mag 7 in that. And I would start looking at kind of the second round of AI. Who's actually going to be a great AI implementer? Not just who's generating all of this, who's building the data centers, but who's going to utilize AI? You just had, Adobe, and you were talking about that. I actually think there's great potential for Adobe in 2026 because of the way they might be able to implement that. So maybe start looking at the second level of AI and not just at the Mag 7.
Yeah, software did not have relatively a great 2025 for sure.
Right.
Maybe a better year in 2026. Beyond tech, Victoria, what are some other sectors that interest you, where you see opportunity?
So I think what's so important and what we're looking at, and when we talk about where you want to be in the market, look internally at these sectors. Who still has a positive trend? Who's starting to make a bottom in their relative trends versus the market? You can look then for a consolidation in those uptrends. That's the sector you want to be in. So where are we seeing it? You're seeing it in transportation. You're even seeing it in some of the home builders, which if you had told me home builders would start to make an uptrend, I would have been really surprised. But we're seeing it there. We've been seeing it in healthcare. So that's a great area. You're starting to see it in energy. So I think you can start looking in some of these. I'm not saying go all in on these sectors. I'm saying look within these sectors and find opportunities because this is where you're starting to see some growth.
Victoria, Victoria, always great to see you, especially on set. Thank you.
My pleasure. Thanks.
Broadcom fourth quarter earnings are just now crossing the wires. Let's get you those numbers. Q4 EPS 195 versus an estimate of 187. That's a beat. Q4 net revenue, I'm seeing 18.02 billion. Consensus was 17.47 billion, so a beat on the top as well. More importantly, I'm looking at the guidance. There it is, Q1 revenue. They're calling for about 19.1 billion. Estimate was 18.48 billion, so that is better than expected as well. The initial reaction here, we're popping in the after hours. What's impressive about that is that's on top of a year where this stock has been a rocket ship. I mean, heading into this print, it was already up more than 70%. Broadcom, of course, listen, it sells chips into a number of important verticals we watch closely: wireless, networking, storage. Also helps customers design custom AI chips. Lots of excitement from investors about that. It has become another kind of bellwether for that AI trade. At least initially here, investors like what they see. Fans of Broadcom, I mean, more than 90% on the street still have a buy on this name, and your average target on the street per Bloomberg is around 432. Well, Lululemon shares, they are rising after its third quarter results, but more notably, the retailer making big news, announcing a CEO succession plan. For more, let's welcome now Morningstar Senior Equity Analyst David Schwartz. David, your timing is always as perfect because this was some big news. Lululemon doesn't just report financial results. We got, David, big changes in the C-suite. The CEO stepping down there. This was obviously following a period of slowing sales, but CEO Calvin McDonald stepping down. The company, we're told, is searching for a replacement. He will depart the company as of the end of January. What do you make of that news, David? Is it the right move for the company?
Well, I guess it remains to be seen if it's going to be the right move. He certainly has been a very successful CEO since he took over in 2018. Lululemon's had its best years in its history. Now, the last couple of years have been tougher, and it seems like that has led to a change here today. But still, that doesn't change the fact that Lululemon has really grown significantly under his tenure, and so a new CEO is going to have to come in and try to get back to where it used to be just a few years ago, and try to get back to that growth period that it had really between about 2018 and 2023 or so. And that's going to be a tall order for any CEO. I'm certain that there'll be a lot of interest in the job because Lululemon is really a very strong company. It's a market leader and certainly one of the most attractive companies in the apparel retail space. So I'm sure that there'll be a lot of strong candidates for that job.
Who should be the next CEO, David? You don't have to give me a specific name. If you want to, you can. But I mean, even just more generally, David, let's say you're on this search committee. I mean, what are you screening for, David, of who steps into that big job? What should be broadly the skills, the talents, the experience you'd want to see?
Well, the first thing is that the person needs to have a strong background in the apparel industry, because if you look at this industry in the last few years, we've had a number of CEO changes, and the ones that have worked out have typically been people with long experience in the apparel space. We've also seen some CEOs that came from other sectors, and they really haven't worked out that well. That happened, for example, at both Nike and Under Armour, and they've gone back to really bringing in people with apparel background. So that's really the main thing, I think, because this industry is so competitive and so difficult that somebody really needs to have a very strong understanding of the competitive dynamics to really take over in a position like this. Now, for Lululemon specifically, the company is expanding geographically very aggressively. And if you look at the quarter, that's where the growth came from, was China and Europe. And so you really probably want a CEO with a lot of international experience. So someone who has experience running a multinational company that's really in growth mode as Lululemon is, and opening a lot of stores and expanding into regions where it's not as well known. Then you also would like to probably see someone with experience in sportswear, because Lululemon is becoming more of a sportswear company than it was in the past, as it's growing its men's business and also expanding into areas like in footwear.
You know, David, the stock is up strongly right now, but I think we have to acknowledge it had been wrecked heading into this print. It was down about 50% this year, David. I mean, it had been halved. And impressively, despite that, most on the street don't even think all the bad news is priced in. Most are on the sidelines still, despite that drawdown. Remind us, I guess just walk us through, when you look at that chart, I mean, what have been the chief concern or concerns, David, that have been keeping investors skeptical and worried about this one? And how has the company been addressing and responding to those concerns?
Well, firstly, I was one person who did have the equivalent of a buy on the stock. My fair value estimate is $295. So actually, I think it's quite undervalued after this huge decline that we've seen in the last year. When the stock was at $600, I had it as very overvalued. So right now, I think it is really a very strong value proposition for people looking to invest in Lululemon. The reason that the stock is down so much over the past year is really that the company's growth in North America has slowed considerably. That certainly was the case in this quarter, and it's been the case in previous quarters. The reality is that competition in the U.S. has caught up with Lululemon, and it's also had a lot of product misses, put out a lot of products that really did not catch on with consumers. And because there's so many substitutes in this industry, consumers went to other brands. However, Lululemon still has a lot of growth outside of the U.S. We're talking double-digit growth in Europe and China, as well as other parts of the world. And there's a lot of growth potential, too, in North America as the company releases more products in footwear and more women's athleisure products as well. So I think a lot of the problems go back to product development at Lululemon. The company lost its lead designer, Sun Che, who went to Vans Corporation, to Vans, part of VF, and is running that now. And ever since then, Lululemon's had some trouble really putting out products that have caught on with consumers. So I think a lot of it is product development, but I still think that the brand is very popular.
I mean, if the issue there, David, is, listen, as you put it, they swung and missed on some product. In your opinion, do they have the right compelling product now? Have they rectified that? Or at least, do you feel like they have the right compelling product in the pipeline, even as you know competition is intensifying?
I think we're starting to see that, but I think most of the new products are really coming next year, and so we don't know yet how they'll do. I do think the company has been very honest and forthright about the problems in product development, and that it has taken aggressive action. And there's a lot of new products coming out for the spring period. So it may be a quarter or two before we start to see really if things are working better or not. Now, there is a CEO change, so that does complicate the issue. But I do think that in next year, we could see some positive signs that could be a catalyst for the stock going higher.
David, always great to see you. Always appreciate that instant analysis and reaction. Thank you.
Thanks.
Time now for To Watch Friday, December 12th. We're going to start off on the Federal Reserve. A few Fed officials making the rounds tomorrow, including Fed Presidents Anna Paulson, Beth Hammack, and Austin Goolsbee. This is coming after the Fed cut interest rates by 25 basis points at December's FOMC meeting on Wednesday. Markets didn't seem to mind the hawkish cut, with stocks posting solid gains on the trading day. Fed Chair Jerome Powell was mostly upbeat about economic growth in his post-decision presser. Investors will be listening closely to all the new commentary for any clues about the Fed's monetary path forward as we enter the new year. Taking a look at earnings as well, we're going to be getting more insight into the retail sector on Friday with Rent the Runway, the company announcing results for the third quarter before the markets open. Analysts expecting sales to pick up in Q3, driven by a price increase in August, more subscribers joining over the quarter, and solid demand for work and going out clothes. The earnings report giving us another glimpse at the health of the consumer. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. But don't go anywhere. On the other side of the break, it's Asking for a Trend. Stay tuned.